Good day, traders. Welcome to today's webinar. My name is Wesley Govender. Thank you for joining me. Good morning, everybody. Good afternoon, good evening, wherever you may be in the world. Thanks for joining me on today's webinar. It's great to see everybody here. I'm just looking through the attendees list, and I can see we have quite a lot of people here today. So if you are able to hear my voice and if you can see the screen, would you be so kind as to type in a yes into the chat box? And if everything's okay, we can then look to get started. Okay, yes. Audio and video coming through. Thank you very much, David. Awesome. Welcome, everyone. It's nice to see you all here. Hi, David. Hi, John. Hi, Andrew, Stephen. We have Derek here as well. Michael, Josiah, Julie, Max, Reed, Frank, Billy. Wow, there's just too many names to actually go through all of them. So if I don't mention you by name, ladies and gentlemen, please do forgive me. It's great to see you all here today. We'll just give it a minute or two and let the rest of the audience join in. You can still see that there are some people coming in. So let's just give it a minute or two and we can then get started. Now, I know everybody's really excited to start trading with the system. We've got a really nice webinar lined up for you today. What we're going to be doing is looking at some of the key components that are part of the system. We'll get a chance also to look at the members area, and we'll also look at the rules for entering buy and sell trades, together with a few examples, so that by the time we get to the end of this webinar, you'll have a pretty good idea of how to start trading with the system, and you should be able to get started from there. So let's just see. Okay, still a few people coming in, but we don't want to spend too much time on that. There's a lot of ground we're going to cover today, so let's get started. Of course, this webinar is recorded, so if you miss out on anything, you are welcome to download a copy from the members area. Okay, and with that being said, let's get started. Let's take a look at our first slide here. So once again, ladies and gentlemen, welcome to the webinar. It's great to have you here. There's a couple of things that we're going to be covering on today's webinar. We're going to start by having a look at the members area. I'd like to give you a quick run through of the members area so that you know where to find everything, so that you know how to contact us, and you know where all the important information related to the system can be found. We'll then do a bit of an overview on the system. I'd like to give you a little bit of information about the system and tell you more about how it actually works and what it is that you actually have in your hands right now. We'll then take a look at downloading and installing the indicators. Now, I know many traders would be familiar with this technique, and there is a video provided in the members area that will show you exactly how this works. But we're going to cover this just for the traders who are still new, that may not be familiar with how this works. We'll do a quick overview on this, and by the time we are through with this part, you should have a pretty good idea of how to download and install the indicators on your own. We'll then take a look at the rules for buy and sell trades. Okay, so we'll get a chance to take a closer look at how these rules work. How do we identify buy trades? How do we identify sell trades? How do we actually place these trades? Where do we set our stop losses? Where do we set our take profits? All of these questions we will answer when we talk about the buy and sell trade rules. And of course, as we get close to the end, we'll take a look at a couple of different examples. We'll look at some buy and sell trade examples so that when it's time for you to look for these particular trades on your own trading platform, you'll have a pretty good idea of what to look for. You'll also know exactly what they look like, and that should help you identify them a lot easier. And just before we get to the end, we'll do a quick question and answer session. So I do encourage you, if you have any questions, if you are uncertain about anything, please do type in your questions into the chat box. That's the box that you see on the right-hand side of the screen. Right at the bottom, you're going to see chat. If you type in a message there and hit the enter button or click on the send button, you're going to be able to send your questions through to me. So we'll stop every once in a while and see if there are any questions that we can answer as we discuss the different components of the system. But if we don't get to that, we'll take care of all of the questions once we get to the end of this webinar. Okay, so that's pretty much an overview of what we're going to be covering today. Let's get started. We'll take a look at the members area. Now, in our members area, there are a couple of things that you will find here. Like I mentioned, many of you may already be familiar with the members area and where everything is. But for those who are still new and are not sure exactly where to find everything, there's a couple of things you want to be looking for in the members area. Firstly, we have the indicator and the templates. Okay, now this template will be used to apply the chart or the indicators to your charts on your MetaTrader 4 trading platform. We've also got the manual, which will give you an overview of the system, how we came up with the system, and also show you the rules for buy and sell trades together with examples, so that by the time you go through the manual, you'll have an excellent idea of how the system works, and you should be able to identify trades and trade the system on your own. We also have the cheat sheets. Now, the cheat sheets are important because as a new trader, and when you're starting to work with a new trading system, it can be a bit cumbersome sometimes to open up PDF documents and to look at an entire manual to get an idea of how the system works or to be reminded of the rules. So the cheat sheets are a summary of the rules that you can carry around with you. You can print them out and you can take them with you. And whenever you're trading the system, you can refer to them as a quick reference. If there's anything that you're uncertain about, one look at the cheat sheets should be able to put you back on track. And then, of course, we have webinars. Any brand new webinars that we do over the course of the next few weeks will be added over here. This is the same area where you would have picked up this particular webinar. So let's just go to the members area and take a quick look at the layout. Okay, so you should be familiar with this particular area here. We're at the secret profit levels members area. First thing you'll notice right at the top of the page, we've got a nice big welcome video for you. If you haven't seen that one as yet, please do go through the video. You'll notice at the top, we've also got our support icon. So if you need any help, this is the area where you'll be able to contact us. You'll also notice the chat icon at the bottom here. So once again, if you need any help, you are welcome to contact us on the live chat. Now, just scrolling through some of the material here, we've got, like I mentioned, our manual. Okay, so first stop for any traders that are new with the system would be to go through the manual, and that should give you a pretty good idea of how the system works. Okay, and the manual is in PDF format, so you can download this and you can even print it out if you like. We've also got the cheat sheets over here. I was telling you about the cheat sheets, which can be used as a quick reference. You can download the file from here and you can print this out and carry it along with you. Next, we have the indicator link. In order to apply the system to your trading platform, you're going to have to download the software. So use this link to download the software, and you can then install the software on your trading platform. And like I mentioned, finally, we have our webinar section. So any new webinars that do come up will be posted over here, and you can download these or even watch them in your web browser. So that's just a quick overview of the members area, give you a better idea of where everything is. A lot of the stuff that you are going to be using when actually trading the system and learning about the system can be found right here. Okay, so you might want to bookmark this page. If you are using the Google Chrome browser, just click on the little star icon over here to bookmark this page, or press Ctrl D so that you'll always have a link available whenever you're looking for this page. Okay, let's just return to our presentation. So we took a look at our members area. Let's now take a look at an overview of the system. Now, as you can see here, the secret profit level system is a very simple, but at the same time, very powerful and productive strategy that offers a lot of profitable opportunities. It is easy to understand and implement because there are no complicated readings of different indicators involved. It's just a basic knowledge and understanding of the Forex market that is required in order to trade the system. The most commonly used levels for setting stop losses are round numbers, because it is in our human nature to seek some kind of order. For the sake of our discussion, the round numbers I'm talking about can be increments of 100 pips. So if we were to look at this example over here, we're looking at the euro US dollar, and you can see that we have two prices here. The first price, 1.2900, and the second price, 1.3000. Now, the difference between these two prices is 100 pips. Okay, and when we're talking about round numbers, what we are referring to exactly are increments of 100 pips on any particular currency pair. Now, in this particular case, we were looking at the euro US dollar. So every time price goes up another 100 pips or so, that is a round number. Okay, so the next round number in the sequence would be 13100, 13200, 13300, and so on and so on. Okay, so round numbers are very easy to recognize. You're going to find them across all the currency pairs that you're trading. You're going to find them pretty much on all your charts. As long as there is a price, there is going to be a place where you can find a round number. And in most cases, we're looking at round numbers at 100 pips. Okay, let's move on. Now, taking advantage of this, the big players tend to make big money around these round numbers. And the way that they do that is from smaller traders that don't set their stop losses properly. This causes a strong directional momentum that gives them a bigger chance for profits. To increase the odds in our favor, we can model our trading strategies to work around this, such as placing our stop losses at less typical levels or even riding on these strong stop loss breaking movements. Now, you'll get a chance to see exactly what I mean by this when we actually look at our trade examples. So, for the time being, let's move on to talking about downloading and installing the indicators. Now, like I mentioned, there is a comprehensive video in the members area itself, just above the link to download the indicators. And if you watch this video, it will show you the steps required to actually download and then go about setting it up on your trading platform. So we're not going to talk too much about this over here. If you are running into any trouble downloading and installing the indicators, refer to the video. If you're unable to resolve the error, you're welcome to contact us, and one of our traders on live chat will be happy to help you install it. Now, just to run through the steps required for downloading and installing the indicators, there are 5 simple steps that you need to follow. The first step is to download the installer, which is in zip format, from the members area. Now, we took a look at the members area. We had a look at the link where you can actually download it. All you've got to do is click on that link, and that should begin the download process. Now, once the file has been downloaded, what you've got to do now is open the downloaded archive by double-clicking on it, or extract it by right-clicking and choosing Extract. Now, depending on your computer, depending on the operating system you use, the steps might be a little bit different. You may have the option just to double-click on it and it will open up, or you may have to right-click on it and choose the Extract option. Whichever method you decide to use, you're going to end up with the same result. And that result is going to be basically a folder, and you're going to see a couple of files in there. So if you move on to the next step, you can see run the secret profit levels.exe file, which will start the auto installer. This means that in this folder that we've just opened up, we're going to find a file called secret profit levels.exe. If we double click on this file, okay, or if we right click and choose run or open, it's going to start the auto installer for us. Now, once the auto installer has started, all you've got to do is just follow the prompts on this installation wizard and you'll be able to complete the installation. The first step, obviously, is to read and accept the agreement. And if you agree, simply follow the rest of the instructions on the auto installer. And once the installation process is finished, you'll have the indicator and the template installed and ready to use in your MT4 trading platform. At this stage, everything has been installed. The only thing you need to do is open up a new chart and apply the secret profit levels chart template. And like I mentioned before, this process has been recorded in video format. So if you do run into any trouble, just go to the members area, click on the video, and you should be able to follow along and have the indicator installed on your PC. Okay, so this brings us to our rules for buy and sell trades. Now, just before we actually get into this, I'd just like to take a quick look at the questions and see if we have any questions that are coming through. Okay, I see a lot of hellos. Welcome, everybody. It's good to see you all here. A lot of people who have come in a bit late. No problem at all. It's good to have you guys here. Yes, the webinar is being recorded, so you will be able to download a copy of this from the members area. Okay, audio, video is good. Okay, great. Okay, so far so good. So let's continue. We'll now look at the rules for buy trades and sell trades. Now, we're going to start off with the buy trade rules, and we'll go through each of the rules and discuss them so that we can understand how the system works, and you'll know exactly what you're looking for when you're actually trading the system on your own. Now, as you can see, the buy trade rules have been written out over here. They're all very simple rules. Each of them is a criteria that must be met in order for us to enter the market with a trade. Now, in the case of buy trades, the first thing that you'll notice over here, step number 1, the trend must be heading up. Now, what that basically means is that when we're looking at our chart, we want to see that the prices are moving higher. We want to see that price is forming new higher highs and new higher lows as it continues moving higher. We want to see that there is some momentum towards the upside. And if we have this, if we can identify this on our charts, then we can start looking to enter the market with a buy trade. But there are a few more conditions that need to be met before we can go ahead and actually place the order. Now that brings us to point number 2. If you look at point number 2, it says wait for the price to climb up towards a round number level. We want the price to break 2/3 of the entire range between two round numbers. Now, at this stage, we're not going to actually look at a chart, but we'll get a chance to look at some charts and examples of this in the slides that are coming up. So for the time being, just follow along. What's important at this stage is that you have an understanding of how the rules actually work. Once we've gone through the rules, we'll be able to take a look at these in examples so that you can get a better understanding. Now, like it says in point number 2, for example, if we are in an uptrend on the euro-US dollar, and let us assume that the price is between the 1.3000 and the 1.3100 levels, we want the price to climb up above 2/3 of this range. Okay, now you'll notice those two prices that we've got there, 1.3000 and 1.3100, there's a 100 pip gap between those two prices. Okay, and if we want the price to climb up above 2/3 of this range, what we need to see is price or a candle moving up above the 1.3067 level. Okay, if price were to move up above 1.3067, it would have moved above 2/3 of this range. Okay, and that is a signal that a possible long trade could be setting up. So far, pretty straightforward. When we're looking at our charts, if we identify that the market is heading upwards, all we've got to do is look at our indicators and determine where the round numbers are, and the indicator will show us as soon as price has crossed above 2/3 of this range. Okay, now we'll get a chance to see that in our upcoming slides. Let's move on to the next point before we do that. Now, point number 3 says as soon as price reaches 15 pips below the next round number, we can open a buy order. If we use the same example with the Euro-USD pair as above, as soon as price breaks the 1.3085 level, we can look to enter the market with a long trade. We can also use a pending order to enter trades. Now, with the indicator itself, you're going to see a level, okay, which is marked for your entry. So on every single chart that you're looking at, you're not actually going to have to go and measure 15 pips above or below the round number. This is all going to be provided for you. You're going to see a line, okay, where you need to enter or look to enter the market with your buy trade, provided the earlier conditions have been met, of course. The other thing about this system is that you don't actually need to be there to place the trade. You don't need to enter the market with a market order. You can set a pending order as long as the criteria has been met, as long as trend is heading upwards, and as long as we've seen price move above 2/3 of the range. We can then look to wait for price to reach 15 pips below the next round number, and as long as we see that, we can then place a pending order and walk away from the trading platform. Now, placing the order is just one part of it. We also have to ensure that we set a stop loss and a take profit. Now, the stop loss is covered in our next step. Point number 4. The stop loss is set 15 pips under the entry point. Okay, now for a buy trade, obviously we're going to have to set our stop losses below our entries. So 15 pips away from the entry point, pretty straightforward. Not a lot of thinking or thought required in order to set that. We can set our stop loss and then look to set our take profit. Now, point number 5, when it comes to take profits, we have 3 options in setting the take profit. We have the conservative, the aggressive, and the managed. Now, let's take a closer look at each of these different options. When it comes to the conservative exit, we're looking to target the next round number. And on our indicator, this is shown by a horizontal line and a text label called first target. Okay, so it'll be pretty easy to see on the actual indicator itself. In the example that we use with the Euro US dollar, our first target is set at the 1.3100 level. Okay, and you may remember that number because that was the extremity of that 100 pip gap. Okay, so that is the next round number, and we'll use that for a conservative target. Now, the next type of exit we have is the aggressive exit. Now, this is the round number plus 15 pips. And on our indicator, you will see this shown by a horizontal line and a text label with the text second target. So again, no need to actually measure anything. You're going to see these lines and these labels on the actual chart itself. So you'll have a pretty good idea of exactly where to insert your take profits. Now, in the case of the example we were looking at on the Euro US dollar, our target or the aggressive target would be set at 1.3115. Okay, and this is simply the round number level plus 15 pips. The round number level obviously was 1.3100. Add on 15 pips to that, and we've got 1.3115. Okay, and our final exit is the managed exit. Now, with this particular exit, we are looking to close half of our position on the round number level. Okay, that is the first target, remember. Then move our stop loss to break even and close the rest of the position at the round number plus 15 pips. And if you remember, that is actually our second target. Now, by doing this, we can look to lock in some profit and preserve the trade by moving the stop loss to break even. Okay, the sooner we can bring that stop loss to break even, we take off all the risk on that trade, and worst case scenario, we're going to end up with a trade that doesn't cost us anything. We're going to end up with a break-even trade. Okay, and if it does manage to go in our favor, we're going to hit our second target, and we're going to be able to take in a bit more profit. So those are essentially the buy trade rules. Now, like I said, we'll get a chance to take a look at this in a bit more detail as we look at our chart examples. Let's just do a quick survey and see if everybody is able to follow along so far. Is everybody okay? Does everybody follow? Just type into the chat box and we can take a look at that. Yes, okay. Yes, 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 okay. Yes, very clear. Yes, okay. Okay, thanks for your feedback, folks. Thank you. Okay, so at this stage, does everybody feel that they are confident or that they know what they're looking for buy trades, or when it comes to identifying buy trades? Do you guys feel that these rules are pretty straightforward, pretty easy to understand? Yes? Yes, okay. Great stuff. Okay, so we've just spoken about buy trade rules. Let's go take a look now at sell trade rules. Now, the sell trade rules are the opposite of the buy trade rules, but there are some things that are similar. Now, we'll get a chance to take a look at that. Let's just start with rule number 1. The trend must be headed downwards. Now, we saw with buy trade rules that the trend must be headed upwards. With sell trades, it is the opposite. All we've got to be looking for is price to be heading lower. Okay, we want to see price coming from an area where it was at a high level, and it should now be sitting at an area where it's at a lower level. We want to see price zigzagging its way downwards. We want to see that price is forming new lower lows. We want to see that price is also forming new lower highs as it continues moving downwards. If we can see these signs, then we can be pretty sure that the market is in a downtrend, and we may proceed to looking for potential sell trades. Okay, so once we've identified the trend, what we've then got to do, point number 2, wait for the price to decline towards a round number. Okay, we spoke about round numbers. We know what these round numbers are. we want the price to break 2/3 of the entire range between two round numbers. Okay, and example, we'll use the euro US dollar once again. If price is between the 1.2800 and the 1.2900 levels, okay, we will wait for price to decline 2/3 of this range or fall below the 1.2833 level to look for a possible short trade setup. Okay, now if price were to drop below 1.2833, we can start looking for our trade. Now, we may not enter the market with a sell trade until price breaks below the next round number minus 15 pips. Now, as soon as this happens, we can go ahead and open a sell order. And in the case of the example we have been using, as price breaks below the 1.2815 level, we can look to go short. We can also look at setting a pending sell order instead of waiting for the price to actually reach that level. Now, a lot of people don't have the time to actually wait for the trade to get to that level. All you've got to do then, simply set a pending order, and you can then walk away from the platform, and it should all be done for you. Okay, so as you can see, up to this point, everything is exactly the opposite of the buy trade rules. Okay, the one similarity is that we're using the round numbers. We're looking at the difference between these round numbers, 2/3 of the range. It's just that we're heading in an opposite direction. Okay, now here come in some of the similarities when actually trading between the buy and sell trade rules. Point number 4 says set the stop loss 15 pips away from the entry point. Okay, similar to what we were using with the buy trade rule, so no change there. The only difference, of course, when setting a stop loss for a sell trade, we're going to have to add on 15 pips to the entry point so that we can determine our actual stop loss level. Just like with buy trade rules, we have 3 options for setting the take profit. Again, we have the conservative, aggressive, and managed exits. Now, we spoke about some of these in the previous slide, but let's just go through them again for the sake of the new traders. The first type of exit that we have is the conservative exit. And by conservative exit, we are referring to the next round number. Okay, and like I mentioned on our indicator, this is highlighted by a horizontal line and a text label called first target. So you'll be able to see that very clearly on the actual indicator when you're looking at your charts. Now, in the example that we were discussing, our first target is at the 12800 level. Okay, because that obviously is the round number that we were looking at. The next one is the aggressive exit, and this is the level 15 pips below the round number, or also known as our second target. And once again, on the indicator, you will see a horizontal line and a text label called second target, so it'll be very easy to spot. You won't be able to miss it. Okay, and going back to our example, if we're looking at the example that we've been discussing with the euro US dollar, this price level will be at the 12785 level. Okay, and like I mentioned, it will be highlighted for you, so no need to actually calculate these prices on your own. And the last one, once again, is the managed exit. Now over here, we will close half of our position when price reaches the round number, okay, also known as the first target, don't forget that. And then we move our stop loss to break even, and we then look to close the rest of the position 15 pips below the round number. And this, again, is our second target. Okay, so very straightforward. If you thought the buy trade rules were easy, I'm sure that by now you can see that the sell trade rules are just as easy, if not easier. Okay, so let's just stop and see if everybody follows along. Is everybody still with me? Do you guys follow the sell trade and buy trade rules? Yes. Yes, it would be good to see it in a chart. Yes, exactly. We're going to take a look at that on the next slide. Okay, just scrolling through some of the questions here. Okay, not questions, more comments. Yes, following so far. Okay. Yes, still with you. Okay, excellent. No problem. Okay, so let's go ahead and take a look at a couple of examples. Now we're going to start off with a buy trade example. You can see over here we have the indicator lined up on our chart. Okay, And essentially, what we're looking for, okay, we're looking to see that price is in an uptrend. We can see that price has been moving up for quite a while. And eventually you can see that while price was moving upwards, it was in the green area over here. This line shown over here, this represents our 2/3 level. Okay, so that's at 2/3 of the distance between the two round numbers. Okay, so we have one round number down here where you see the red and the green areas meet. Okay, so that's a round number. We have another round number up here at the entry point. Okay, you can see that green horizontal line, okay, or the base of the triangle. Okay, and then 2/3 away, we've got this dashed green line. Okay, and now this is for buy trade, so we're seeing the green area of this trade. And as you can see, as soon as price crossed above that area, this is where we start looking for a potential buy trade. And then at this point, what we could do is look to set a pending order at our entry point at the round number. Okay, so we can set our pending order here. And as you can see, we have our first target and second targets over here. So within a couple of candles, you can see price has taken us into this particular buy trade. It had moved upwards and price had then hit our first target, okay, the conservative exit. And at that stage, if you were using just the conservative exit, you would have been taken out of this trade completely. So your stop loss would have been set 15 pips below the entry point. So about 15 pips away from this green line is where we'd be looking to set our stop loss. If we were using the conservative exit, we would have been looking to close the trade, or our take profit would have been set at this level. So when price reaches this level, we would have been taken out of the trade completely. Now, if we had been using the aggressive exit, okay, you can see up here we have our aggressive exit line, or the second target line. We'd have been looking for price to get up to this area, tag this line before we get taken out of the trade. We can set our take profit in this area if we want to use the aggressive exit. And as you can see, price moves up nicely in this example. It spikes up here. Okay, we get a high, and we would have been taken out of this trade at target 2, or the second target. Now, if we were using the managed exit, okay, what we'd be looking to do is we'd be waiting to see price get up to our conservative exit, or our first target. As soon as price hits this level, what we want to do is close out a portion of the trade and move our stop loss from 15 pips below the entry right up to the break even, or the entry point. Okay, as soon as we put our stop loss there, we can allow the rest of the trade to continue. If it continues moving up, like it did in this example, it would go on to hit our second target over here. Okay, and we'd be taken out of the trade completely. If it were to fall, okay, after we had closed out the position and moved our stop loss to break even, the worst that can happen with this trade is that we would have been taken out with the break even trade. We would not have lost anything. We would have closed out half the position at the first target, and as price went against us, we would have lost nothing when we would have been exited from the trade as price hit our stop loss at the entry point. Okay, so again, just to sum up, very straightforward. We're looking to see an uptrend. We're looking to see price trading in this green region, moving higher. Okay, as soon as price crosses above the 2/3 level between these round numbers, okay, and that's the dashed green line, at that point, we can start looking for a potential entry. We can look to set a pending order, or we could wait to see price cross above the entry point. If we're waiting to see price cross above the entry point, as soon as it crosses this level, we want to go out to our trading platform and open the trade. Okay, we can set our stop loss 15 pips below the entry point. So somewhere in this region over here would be our stop loss. And you can see our targets. Target number 1 for the conservative entry, target number 2 for the aggressive, and we'll use a combination of both of them together with moving our stop loss to break even in the case of using the managed exit. Okay, so at this stage, does everybody follow? Does this make the buy trade rules a little easier to follow or easier to understand? Yes, much better. Okay, excellent. Yes, yes, yes. Okay, very easy. Yes. It's really straightforward, ladies and gentlemen. There's not a lot of discretion involved. In fact, very little discretion, if none at all, involved with trading the system. All you've got to do is rely on your indicators, wait for price to fall into position and then place the appropriate trades. So actually no discretion involved whatsoever. All you've got to do is just look at the indicator, trust the indicator, place your trades accordingly. Okay, just reading through some of the comments. Everybody seems to understand so far. Very good. A very good class here today. So one more. Let's take a look at a sell trade example. Now, in this particular case, you can see price has crossed our entry point, so we could have used a market order, or we could have set a pending order at this line as soon as price had crossed below our 2/3 line. Okay, now it crosses below our entry point, so depending on which type of order we use, we'd have been taken into the trade here. And once again, you can see our first target and our second targets, right? So these lines have been placed here. You can see that within space of a few candles, prices come back down and hit our first target. Okay, so if we're using the conservative exit, very straightforward. The indicator is going to highlight the entry point for us. It's also going to highlight the area where we need to set our take profit. And in this case, using the conservative exit, all you've got to do is insert your take profit at the first target line. Now, if you prefer using the aggressive exit, all you've got to do, set your stop loss at the second target. Okay, you can see the red line running across over here. All we've got to do is set the stop loss here, and price would come down and we'd be taken out of the trade as soon as we hit our second target. Now, in the case of a managed exit, we're going to use a combination of both of these. As price comes down in our favor, we get taken into the trade. Okay, we can look to close out half the position as soon as price reaches our first target. We can close half the position, and once we're done doing that, we've got to move our stop loss. Remember, our stop loss will be set 15 pips away from the entry level. Okay, so you're looking somewhere in this region over here. And we'll move the stop loss to the entry level, and that will help us reduce the risk on the trade. At that stage, we won't be able to lose anything on the trade. Okay, so if price were to go against us and move in the opposite direction, we'll be taken out with half the profit on the trade at target 1, and we'll be taken out with no loss or 0 on the remaining position. And as you can see in this particular example, price has continued to move in our favor, and it goes on to hit our second target. So we'd have taken half our profit at target 1, move the stop loss to break even, reduce the risk on the trade, and price continues to go on to the second target, and we get taken out with profit at both the first target and the second target levels. So the actual choice of entries and exits that you would like to use, it depends entirely on you, depends on your own personal preferences. I would recommend that if you're still starting out and if you're still new to trading, work with the conservative exit, okay? And start with that. Once you've gained a bit more experience, you can look to experiment a bit more with the aggressive exit and the managed exit. So start off small, try the conservative exit, try it on a demo account over a couple of trades, and then you could even try out the other 2 types of exits as well. I'm pretty sure that by the time you've tried them out, you will have a preference for one over the other 2. So whichever one you feel the most comfortable using, by all means, please do use that particular technique. Okay, so I think we've come to the end of the buy and sell trade rules and our examples. Let's open up the floor and see if anybody has any questions that they would like to ask. Okay, I see that a couple of questions had been posted throughout the webinar. So what I'm going to do is just start scrolling through these questions, and I'll pick them out and answer them. And if you do have any new questions that you would like to ask, by all means, please post them into the chat box and I'll get to those as well. Now, one thing I am seeing here, folks, is that a lot of folks are asking similar types of questions. I think I just saw about 5 or 6 people ask what pairs are the best to trade. And that one's come up since the beginning of the webinar. I can see a lot of folks have asked that question. So when it comes to choosing the best pairs to trade, some of the best pairs that you can actually trade are the major pairs. And by the major pairs, I'm referring to the Euro US dollar, the Great Britain pound US dollar, the US dollar Swiss franc, and the US dollar Japanese yen. We've tested the system across all currency pairs and we found that they work the best. But these major pairs tend to perform more reliably. Okay, you tend to have a lot of volatility on these pairs, and also the spreads are very competitive. So when it comes to choosing currency pairs that you want to trade, I will always suggest that traders start with the major pairs because these are the best pairs that you could be trading. Okay. Also, like I mentioned, the system can be applied across all currency pairs. Okay, so you can trade them across all currency pairs, and yeah, I guess it's just a matter of selecting the pairs that work best for you. If you are still new, you want to limit the number of currency pairs that you trade. You don't want to be trading 20 or 30 different currency pairs all at once. Okay, it's going to put you under a lot of pressure. So the best thing to do is when choosing the currency pairs, choose the ones that you're familiar with. Start with the majors. Okay, if you start off with about just 2 currency pairs and all you're doing is trading those 2 pairs, if you feel like you're not getting enough signals or like you're not getting enough trades, what you can do is add a few more currency pairs. You can keep adding on currency pairs until you get to a point where you find that it's becoming too much for you to handle on your own. Okay, and at that point, it may be time to stop right there and use the number that you have, or maybe even eliminate 1 currency pair so that you have something a bit more manageable to handle. Okay, so yeah, the choice is entirely yours. If you were to ask me which one I traded on, I'd be using the major currency pairs. Some other pairs that are also pretty good to trade with the system are the Euro Japanese Yen, the Great Britain Pound Japanese Yen, the US Dollar Canadian Dollar, and the Aussie Dollar US Dollar also seem to work out pretty well. So together with the major currency pairs, you can also look to add those currencies to your watch list. Okay, I hope that answers the question, ladies and gentlemen. Let's take a look at a few more. Okay, I see here questions from many folks again about sessions. Is it okay to trade during the Asian session? Is it okay to trade during the New York session? What sessions would be the best to trade? The short answer would be any session. You could trade the system across the board, across any session that you like. You will notice that this system is a bit different from other types of systems. It doesn't matter what time frame you trade. Okay, when the actual entries occur, they're going to occur across all the time frames at the same time. Okay, so if price is crossing a particular area, you can, it will cross that area at any given time. You don't need to be stuck within a single session. The best sessions to actually look to trade the system would be during the European and the New York sessions, and mainly because these are the sessions where there is the highest volatility. Okay, and if there is high volatility, you're going to find that there's a lot of movement. You're going to find that price is going to move a lot more than it usually does. It's going to cross these round number areas a lot more often during high volatility times compared to lower volatility times. Okay, that doesn't mean to say that there aren't going to be crosses of these areas during the quieter sessions. You will find that price is going to cross these levels and present you with trades, but you will still find that during the higher volatility sessions, there is a higher chance or there is greater movement, and that presents us with a higher probability, the chance or the market presenting us with a potential trade. Okay, so while you can trade the system across any session, right, you will normally find that the best trades will occur during high volatility sessions, and the best would be during the New York and the European session. Okay, I hope that answers the question. That one was from Stephen, James, Jimmy, Derek. A lot of folks actually asked that question. So I hope that covers it, folks. Okay, excellent. You're welcome. Just looking through, let's see what other questions we have. Can I use multiple charts to trade at the same time? Yes, of course. Like I spoke a little bit earlier when we were talking about the best pairs to trade. You don't want to be starting off with too many pairs or charts all at the same time. You can use the system across as many currency pairs as you want, but that doesn't mean that you should actually open up every single currency pair chart and trade it. Okay, so start off with a nice, reasonable number, something that you can manage, something that you can that's not going to drag you away from what you're normally doing. Okay, so yes, you can trade it across multiple charts at the same time. Okay, but just be wary not to overwhelm yourself or overload yourself with too many currency pairs to check and to trade. Just scrolling through some more questions. Okay, what lot size should I use was one question came through from a few people I can see as well. When it comes to lot sizes, I do recommend that you use a lot size calculator. Okay, what you want to be doing is risking no more than 2 to 5% of your account balance on any single trade. And especially if you are a new trader, you should be using even less than that. Okay, as low as possible. And the reason for that is if you are to risk 2% per trade, okay, your account will be able to withstand at least 50 losses in a row. Now, from trading the system and working with the system quite closely, I can tell you that there's a very low likelihood that anybody is going to make 50 losing trades in a row. Okay, but by risking 2% on each trade, it means that you give yourself a greater chance. If you do make a mistake or if a trade does go against you, it's not going to cost you an arm and a leg. You're not going to lose your account. Okay, you're going to be able to come back again the next day, take another trade, and make back those losses pretty quickly. Okay, so when it comes to lot sizes, use a lot size calculator. There are plenty of them available on the web. Just search for lot size calculator or position size calculator. You'll normally need to enter in the percentage that you want to risk of your account balance. You will need to choose, enter in your account balance as well, and also choose maybe the currency pair, depending on the calculator you're using, and it will actually spit out the lot size for you to use on each and every trade. Okay, so I hope that helps. And that one is from Julie. Another question here from Michael. Can I trade with a small account? Yes, of course you can trade with a small account. I saw somebody else also posted a question. I think it was Josiah. And he asked, can I take a trade at level using the leverage 1 to 50, 1 to 100? Which one would you recommend? You can trade the system with any size account and also any leverage. It doesn't have any bearing on the actual system itself. It's not going to affect the performance of the system. One thing you will notice is that your wins and losses will be relative to the leverage that you have in your account. Okay, if you have a smaller account as well, you'll only be able to risk smaller amounts on that account. Well, at least in the beginning. Once you start trading and you start building up the account, you can slowly start to increase it. The system can work with the smallest account available. As long as you choose your lot sizes correctly, you shouldn't have any problem trading with any size account. Okay, let's just see. Starting to run out of time, folks. Let's see. I think we've gone through the majority of the questions. Let's see if there are any more that I might have missed out. Okay, can I use the system with any other system? Yes, you can actually. You are welcome to modify the system if you want. I would recommend, though, that if you are using it for the first time, that you stick to the rules, get familiar with how it works, and once you've mastered it, at that stage, you can look to experiment, maybe add on a few things, maybe combine it with other trading systems that you're familiar with or that work for you. So, yeah, definitely, you can modify it in that sense. Can you trade it while trading other systems, if that's what you meant with that question? Yes, you can. Okay. I normally don't like to do it that way. I normally like to keep them separate. So on each account, I'd normally be trading a separate type of system. Okay, but if you are comfortable trading that way, there's no reason why you can't actually do it. Another question here from Max. Can I trade any time frame? Yes, I think we covered this one during the actual webinar itself. But yeah, you can trade on any time frame. Like I mentioned earlier, the system is not dependent on time. So no matter what time frame you're trading, whether it's a daily chart or a 1 minute chart, when the entries occur on the daily chart, you could go down to your 1 minute chart and you'll see that the entries have occurred there as well. Okay, so it's not dependent on the actual time frame. You can apply the indicators in the chart template to any time frame and monitor it that way. It's just a matter of personal preference. If you like looking at your charts on a 1 hour time frame or a 4 hour, you're welcome to do that. But you will find that the entries occur at the same time. Okay, so the actual time frame that you're looking at is not really that important. What's important is when price actually crosses these levels. Okay, folks, I think we're coming to the end here. Let's just see if we have any more questions. I think we've pretty much covered everything. Yeah, I see a lot of repeated questions, so I think we've covered the lot of them. Okay, so I think, ladies and gentlemen, we'll call that a webinar. Okay, thank you very, very much for joining me today. It was wonderful to see so many people making time to join me for this webinar today. I really appreciate you being here today. Thank you for all your questions. And of course, if you do have any further questions, okay, you are welcome to contact us. All you've got to do, head into the members area, click on the support tab. You can contact us via live chat, via telephone, via Skype, or even email if you prefer. So please, if you do have any questions, I do encourage you, write into us, let us know what you need help with, and we'll be more than happy to assist you with this. Also remember, this webinar will be posted in the members area, so you should be able to download a copy pretty soon. So keep an eye out for that. And I think that's it. So we'll leave this webinar there for the time being, ladies and gentlemen. We will be having webinars coming up over the course of the next few weeks. So please do keep a lookout for that. We'll get to join each other again and discuss the system in much more detail, perhaps even look at a couple of charts together. So I hope that you will join me for that one. I'll be sure to send you an email. Remember, keep an eye out on your inbox. We'll be sending you emails to keep you up to date with how the system is performing. If there are any updates to the system, you'll be sure to hear about it in your email. So please do, over the next couple of days at least, keep a close eye on your mailbox because we'll be sending you some information pretty soon. So that's it for now, ladies and gentlemen. Again, thank you very much for joining me today. I hope that you enjoy the rest of the day. Take care, and I'll see you next time. Bye for now.